Okay, hello guys. Thank you guys very much for coming today. My name is Jerry, and I'd like to deliver my special thanks to the board members who are here with us today. What we want to share with you today are what you need to know about the Incorporated Societies Act 2022 and the Charities Amendment Act 2023. Yeah, Incorporated Societies Act 2022 is the biggest change to the sector in over 70 years, which is why we're all here today. Well, next, we'd like to introduce you the re-registration process, responsibilities, and governance of this act. Before we start, I'd like to clarify that the cut-off date to re-register without losing the incorporated status of your society has now passed, which was 5th April. If your society did not re-register before this date or right after it, its incorporated status has been removed. However, societies can still re-register. The incorporated society status will be restored once the re-registration application has been processed and approved. Well, if you have already re-registered or you are planning to do so, our presentation today will also cover the responsibilities and governance that you must comply. Okay, first of all, why must societies re-register? Firstly, re-registration is legally required to continue existing. If an incorporated society didn't re-register, it's already automatically deregistered. This means that the organization now is no longer existing as a legal incorporated society. This will affect everything from tax status to governance. And because of that, this will lead us to the second major concern, where contracts may be invalid or unenforceable, which means that the society now is no longer able to legally make orders from suppliers, apply for many types of funds, and they can't even legally hire any employees. This will severely limit the amount of funds that the society can access, and the lack of manpower could restrict many types of activities that the society might want to carry out, especially those of larger scale or more complicated procedures. Moreover, officers may become personally liable for contracts or debts because they are not protected by the limited liability shield anymore. Re-registration supports good financial practice. Well, re-registration ensures that the society is aligned with the most updated financial reporting standard and the transparent financial disclosures. This will help strengthen the internal control of the society and hence reduce the compliance issues down the track. Last but not least, re-registration strengthens trust and credibility of the society. Well, we all know that societies need good reputation to attract donors, funders, and public support. Being automatically deregistered is not a good sign of good management. Societies need to build trust with the community by actively following up the new rules and regulations to secure its credibility. Additionally, I'd like to recommend that societies prepare a performance report. This performance report is important in demonstrating the accountability of the society and therefore helping with grants application. Now, I believe that the 5 reasons mentioned above are powerful enough to explain the significance of re-registration. Now, let's hear from Ethan on how to do so.
Thank you, Jerry. As Jerry mentioned, the cutoff date has been already passed, and if you have not re-registered or you re-registered after this date, you have now lost your incorporated status. However, you can still re-register. If the society was operating at the time of its removal and there is still a proper reason for the society to exist, you have grounds for re-registration. There are some other niche examples where you could also apply for re-registration, but the main one being if you were already operating at its time of removal and there's still reason for your charity to exist, you can still re-register for your incorporated status. So what do I need to re-register with? So some key information that you do need to submit is your evidence of operation, your latest financial statements if you have not already filed them, confirmation that your society has at least 10 members, the society's constitution, which now must align with the 2022 Act, contact details for your society, details of committee members and officers, and you will have to pay a restoration fee. So evidence of operation. This includes any documentation that shows that your society was operating at the time that it was removed. This includes legal or financial transactions, meeting minutes, or legal documents. The latest financial statements. Incorporated societies must file a copy of their financial statements to the company's office each year unless you're a charitable trust, and in that case you'll be sending them to Charity Services. These must be attached alongside with your application. You also need confirmation that there's at least 10 members in your society. When counting memberships, a member that is a member or a body corporate will count as 3 in this calculation. And the new rules around society constitution. We have prepared a small handout and a small checklist of things that you need to be put in your constitution in order to comply with the 2022 Act, which you'll be able to view at the end of the presentation, and it is on my left. Next. So contact details for your society. This includes the registered office address, addresses for communication, and details of at least one contact person. Your registered office address must be a full physical address. It cannot be a PO box, private bag, or DX address. And a contact person does not need to be an officer of your society, but it should be someone that can handle inquiries. You also need the details of committee members and officers, including their name, physical address, email address, and start date. Remember, each society must have at least 3 officers, and most of them must be members as well. And the re-registration fee that you will have to pay in order to re-register is $177.78 plus GST. So what now? I now have all these information. What do I actually need to do in order to re-register? So the application form for re-registration is available for you to view on my left at the end of the presentation. And this either needs to be emailed to the email address on screen or needs to be posted physically to the post office address on screen. After that, you will be contacted if any more information is required. And if you're accepted, a notice about the restoration will be published. However, you will have to wait 20 days after publication to allow for objections. Afterwards, your incorporated status will be restored. Now, and I'll hand over to Harry to talk about your new financial responsibility.
Thank you, Ethan. So, under the Incorporated Societies Act of 2022, you must prepare financial performance statements under Tier 3 and Tier 4 reporting. So, let's go through this. Tier 3 reporting is an accrual-based accounting standard, and Tier 4 is a cash-based accounting standard. Tier 3 is a more comprehensive report. Tier 4 is a more simplified report. You qualify for Tier 3 if your expenses are between $140,000 and $5 million per year. You must follow the following: a statement of service performance, entity information, statement of financial position, because it is accrual accounting, statement of financial performance, statement of cash flows, and you must fill out the notes. These notes can be anything from your accounting policies to if you are GST registered. Now, under this, on XRB website, it has a whole template of all the notes and all the financial statements you need to follow. It guides you through the whole process from start to finish, so I recommend going to the website and follow that. To my left here, we do have some example templates for Tier 3. The reason why we don't have Tier 4 ones is because it is so similar. Tier 4 is if your operating payments are under $140,000 per year. You must fill out a statement of service performance, entity information, statement of cash flows, and again, your notes to your financial statements. Tier 3 does require a statutory audit under the new regulations. This is if your expenses are above $3 million per year, so you must get audited. If you are Tier 4, obviously you don't need to be audited, but for both Tier 3 and Tier 4, they are required to be signed by 2 authorized members of your incorporated society, and they must be dated as well by these 2 personnel. Small societies, that is if your expenses and assets are below $50,000. You do not need to make financial statements for those. There is no statutory requirement. However, if you are applying for grants or you want money, it is highly recommended that you do fill out some financial statements under Tier 4. This helps for accountability for your donors. Now, we'll talk about annual returns. Annual returns are due within 6 months after your balance date. You file both this and your annual performance report to the Incorporated Societies Register. An annual return confirms that your incorporated society is still active. It shows its purpose and its activities over the past 12 months. You must provide your organization's details, address, and society's structure, such as your governance structure. The financial information and the annual return is both publicly available on the Incorporated Societies Register. This again helps for transparency and accountability for your donors and people that give you grants. So once you've done both your performance report and your annual return, you must submit your documents. Remember, this is within 6 months after your balance date. This is done on the Incorporated Societies Register. So once you've completed those two, they are both signed and authorized by 2 members of your incorporated society. You must upload them to the Incorporated Societies Register. Again, go onto the XRB website. It's a very simplified process for both of them. They provide details on how to do both of them for Tier 3 and Tier 4 reporting, as well as instructions of how to upload them, as well as information about audit requirements. I will now pass on to Annabella.
There are significant governance requirements to meet under the Incorporated Societies Act. These can be easily broken down into 4 sections. The first section is maintaining your society structure. You must have at least 10 members, which each of these people agreeing to be a member in line with your constitution. Secondly, you will need at least 3 officers in your committee. An officer does not have to be a member, but someone with significant influence over the organization. To become an officer, you must formally consent that you are able and eligible and that you agree to do this role. Finally, you will appoint between 1 to 3 contact people for the company's office. The second type of requirement is holding required meetings. Every society must hold 1 annual general meeting, which must be within 6 months of your balance date and no later than 15 months since your last AGM. At an AGM, this is the committee's chance to present an annual report, financial statements, and discuss any conflicts of interest that may have arisen. It's a great time to gather together as a society, ask questions, vote on key decisions, and discuss future plans. Good governance of a society would encourage more frequent meetings than just the AGM. This may be quarterly, monthly, or more frequent depending on the size and activity of your society. The minute taker should also ensure to take minutes on what has been discussed, as well as write their full name as the recorder and take note of the date. One of the new additions under the updated legislation is the requirement for a triennial governance review. This means at least once every 3 years, the Society must review its governance arrangements and constitution to ensure they remain fit for purpose, help achieve the Society's objectives, and comply with the law. And like the AGM, these minutes need to be recorded and kept. Thirdly is keeping society records. These are things such as the register of members and interests, accounting records, AGM minutes, and the Constitution. Finally, it is important that all required information is provided to the Incorporated Societies Register when necessary, and that any requests from the registrar are responded to appropriately. So overall, while there are quite a few rules, these really come down to making sure your society is well run. If you set these strong foundations and processes, you'll meet your obligations under this Act. We will now be discussing the Charities Amendment Act of 2023.
Awesome. So, like the Incorporated Societies Act of 2022, the 2023 Charities Act brings these two very aligned to each other. So, like incorporated societies, charities must also do that are Tier 3 or Tier 4 must report in the exact same way. Again, refer to the XRB templates for how to do it. But like incorporated societies, Tier 3 is an accrual-based accounting standard. If your expenses are between $140,000 and $5 million per year, you do qualify for this. You have an audit requirement of $1.1 million. So if your expenses are above $1.1 million per year, you are required by the new statute to be audited. This shows accountability and proper governance under the new Act. Tier 4 accounting standards is a cash-based accounting standard, much like incorporated societies. It follows the exact same structure. If your expenses are less than $140,000 per year, you do qualify for this. Tier 3 and Tier 4 also must be signed by 2 authorized members, just like the Incorporated Societies Act. These must be done and dated by these members. We will now talk about the annual returns under the charities. So, like incorporated societies, these are both due within 6 months after your balance date. It must be filed alongside your charity's performance report. And much like an incorporated society, your charity's annual return shows the purpose of your charity. It confirms it is still operating, and it provides the name and governance structure of your charity. It shows that financial information is publicly available through the charity's website, which is how you file it as well. So submitting your documents, a lot like corporate societies, can be done in 2 ways, however. It can be posted or it can be done online. Both may incur a fee depending on your expenses. I believe it's about over $10,000 of expenses per year. You may require a fee. However, it will clarify this when you submit your documents to the charity's website.
The amendment to this Act has seen some different changes. The first is seen with the definition of an officer. This now includes all persons with significant influence over the management or administration of the entity, regardless of the type of entity. There are now new conditions that disqualify people from becoming officers. This is persons who have been convicted of an offence relating to the financing of terrorism are prevented from the role of holding an officer. There have also been changes to the age requirements. At least one officer of the charity must be 18 years of age or over, while the remaining officers can be 16 years or older. The role of an officer has now also been defined better. It explicitly states the role of an officer is to act in the best interest of the charity and to support the charity to meet its obligations, and can be held personally accountable or disqualified for serious wrongdoing. In regard to governance, founding documents must be reviewed on a regular basis. Charities are required to review these documents every 3 years to ensure governance arrangements are up to date and appropriate. We will now be looking at compliance.
So now moving to compliance and recent regulatory changes, starting with the Charities Registration Board. The board must now publish all decline and deregistration decisions and provide a clear process for charities to object to significant decisions. So, for example, if your charity gets deregistered, that decision will be made public. So reputation matters more than ever. Also, the board can now disqualify an officer like a treasurer or chairperson for serious wrongdoing or persistent breaches without having to deregister the whole charity. For example, if a treasurer repeatedly fails to file returns, the board could ban that individual from being an officer elsewhere, but the charity itself can keep operating under the new leadership. That is a significant shift in enforcement. Next, appeals. So there are 3 key changes. First, here appeals can now go to the Taxation Review Authority directly, not just the courts. That's usually faster and less intimidating, especially for smaller entities. The types of decisions that you can appeal has broadened. It now includes significant decisions made by charities, services, and not just the board's decision. So, for example, if Charities Services tells you that your grant application has been rejected due to a compliance issue, you may now appeal that directly. Also, the time frame to lodge an appeal has now increased to 2 months. So if you receive a decision in March, you have until May to respond. So it just gives much more breathing room than before. And finally, there are other regulatory changes that affect everyday operations. So one of them is the time frame for submitting information to charities services on administrative matters has also been extended to 2 months. So, for example, if they ask you for an updated constitution, you now get 2 months to respond. So it just gives you more room to respond as well. So, and also the obligation for charities to remain qualified has now been more clearly spelled out. You must maintain a charitable purpose, have a compliant rules document, and ensure your officers are qualified and they are not disqualified. For example, if your society changes from supporting local artists to running a commercial gallery, you might lose your charitable status because the purpose of your charity has been shifted. So in short, we are seeing more transparency, clearer enforcement powers, and longer but more defined timeframes for appeals and admin filings. So to wrap things up, whether you are tier 3 or tier 4 or a small society just starting out, getting the reporting right saves you time, stress, and keep you on the right side of the new regulations. I know financial compliance can feel like a lot, especially with the recent changes to appeals, disqualifications, and filing timeframes, but you don't have to figure it all alone. We have Dunedin Community Accounting, so they offer free non-profit accounting advice to help societies like yours to navigate exactly this. So if you need help understanding whether you're tier 3 or tier 4 or you're worried about an appeal deadline, they have got you covered. So you can book a session with them down at the Dunedin Community House at 43 Princess Street, or you can just give them a call on this number or give them an email on this email address. And they're just a fantastic local resource. So please do reach out if you need a hand. So that's all from us. Thank you for your time.